Now we will talk about doji and types of doji. As you can see on the screen, this is a doji star and it looks like a cross. The open and close is almost similar and the length of head and tail is very small and almost similar. Now let's understand the psychology of doji star. What exactly does doji star shows? Doji star shows indecision in the market, because as you can see the height of high and low is very small. It means the buyers and sellers are not active, they are not trying to push each other, and this doji star also lacks the volume. It can happen in either trend, either in uptrend, downtrend or side trend, but after the doji star occurs on the chart, we have to wait for a strong price action, then we can easily take trade. Let's see the long leg doji. This is also similar to doji star, but the main difference is the head and the tail is greater as compared to doji star. It means it shows the buyers and sellers are interested in trading and they are trying to move the price up and down. Long leg doji has a high volume, but finally they are not able to dominate each other, so open and close is almost same. The trading psychology of long leg doji is indecision even after having the great volume, because in this case when the price is open, the buyers push the price to the high and the sellers trying to push the price at the low, and then again buyer push the price back to the open. Shows that the buyers and sellers are highly active, but both have the same magnitude, so they are not able to dominate each other, and the price again came back to the open price. Now we will see a dragonfly doji. In this formation, the open, high and close is almost same, but the low part is very far away from the open price. Shows the rejection of the sellers, because after the opening the price, the sellers are trying to push the price down, but then the buyers become active and dominant at the low price and they push the price up back to the open. This shows that buyers are trying to dominate the sellers and there is a strong rejection of sellers in this formation. It also looks like a hammer, but it is weak as compared to the hammer. This kind of formation shows change in direction and can give a trend reversal signal if all the other conditions are properly confirmed. Now the same case will be in gravestone doji, but on the reverse side. The open, low and close is almost same and the high is quite further from the open price. It shows when the price is open then buyers are trying to push the price from open to high, but sellers become active and they become dominant. They push the price back to the open from high. The sellers are clearly dominating the buyers and this formation shows the rejection of the buyers. So the sellers become dominant and there is a high chance of getting a bearish rally. This formation shows actually a change in direction, very similar to shooting star but less powerful than shooting star. But both dragonfly doji and gravestone doji can give a strong trend reversal. Now the final part is 4 price doji, and as you can see it has a flat line where open, high, close and low are all same. It shows ultimate indecision because there is no trading going at all at this candle. It is very unique and it signifies indecision and low volatility, because if you are not even trading then you also don't have a volume and the price becomes flat. This type of formation happens if in intraday. It shows the whenever the particular stock moves to upper circuit or lower circuit, the price candle become flat and it get locked at that price, so there is no trading going on at that time. And if this candle become flat in the daily time frame, it means the upper circuit and lower circuit already occurred even before the market opened. So after the market open, the whole day the price become constant. There is no trading at all. This usually happens when the operator is trying to pump and dump on the particular stock. As you can see on this chart, there is a formation of doji candle here. First we will check all the condition. The first condition, there is a bullish rally, and in the second condition doji candles has formed, and then we mark the high and the low of that particular doji candle. Our entry will be at the low doji candle and our stop loss will be at the high of the doji candle. After the doji candle low is broken, we can see that we are getting a strong bearish rally. Now we will see the trading psychology of this doji candle. In this particular chart, the buyers are trying to push the price up and gives the bullish rally, and whenever the doji candles occurs on the chart after the bullish rally, it is showing that buyers are losing their strength at this point and sellers are become active and they are trying to dominate the buyers. So we will mark the low and high of that doji candle, and whenever the sellers become aggressive and break the low of doji candle, there is a high probability of getting a bearish rally. But in a general case, doji candle can also give a trend reversal and also a trend continuation. So according to this chart, the low is broken, so we are getting the trend reversal, and if the high is broken of the doji candle and it's sustained, then we may get the trend continuation and the price will move up and give a bullish rally. Now let's see dragonfly doji. As you can see on this chart, we are getting a small downtrend here and the formation of dragonfly doji at this point. So we will mark the low and high of dragonfly doji. Your stop loss will be at the low and your entry will be at the high of dragonfly doji. Whenever the high is broken, you can expect a big bullish rally afterwards, and in this chart we are getting a strong bullish rally after the high is broken. So the trading psychology of dragonfly doji is that whenever the price is moving down and it is getting a strong rejection and the formation of dragonfly doji, so it means the buyers are trying to move up and it is giving a climax of sellers, and if the momentum of the buyers also continuing on the next day and it breaks the high of the dragonfly doji, then it confirms the entry of the strong buyers and they are able to push price move more further and can finally give you a strong bullish rally. Now we will talk about gravestone doji. As you can see in this chart, at this point gravestone doji is formed. Before that we are getting a small bullish trend, then the gravestone doji is formed. So we will mark the low and high of gravestone doji. Your entry will be at the low and your stop loss will be at the high of gravestone doji. So whenever the low of gravestone doji is break strong, we can expect a strong bearish rally, and in this chart you can see we have got a strong bearish rally. So the trading psychology of this gravestone doji is that whenever the price is moving up and the bullish rally is formed and we are getting a rejection of buyers in many candles or even a single candle like gravestone doji, which is actually look like a shooting star, it shows the entry of sellers and sellers are trying to dominate the buyers, and this can, at this point there is a climax of buyers which can be confirmed after the low of the gravestone doji broke, and then you can expect a strong bearish rally. Well, as you can see on the screen, this is a 4 price doji. All these flat lines is actually a 4 price doji. This is a chart of NDTV in daily time frame, and we can see the formation of 4 price doji, which is actually a part of pump and dump game created by operator, which is very unethical but still happening in most of the markets. Red candle operator dump is all his share, and then we are seeing the bearish rally. So if the retailer have taken entry in these 4 price doji, they are not able to exit their trade because the volume get locked. Operator controls the volume of the particular company, so you are not able to take entry or exit according to your own wish. Even if you are getting the profit, you are not able to book that profit, because as you can see, you are getting a lower circuit continuously, but the price is still flat because you are not able to get buyers, and in this case you are not able to get the sellers. So it's better to avoid those company who has flat lines in their daily time frame. Now let's talk about the hammer candle. As you can see on the screen, this formation is known as hammer. In this formation, the body is small and the tail of that candle is bigger, and the tail should be at least double or more than double than the body. And the closing price and opening price gives the color to the hammer. So it has green and red hammer, but the color doesn't matter in the hammer candle. The only thing matters is the rejection of sellers, which creates the long tail part from the low of that candle. So basically the trading psychology of hammer candle is the rejection of sellers. As you can see, whenever the price opens at this opening price, the sellers are trying to push the price at the low, but buyers take entry and they move the price back to the open price and even move further to the high in green hammer, which shows the buyers are more aggressive and dominant and taken full control of the sellers in this particular candle. It also shows that buyers have a very high momentum at this point, and if the momentum of the buyers is still continued on the next day, then there is a high probability of getting a bullish rally. So in this trade, your stop loss will be at the low of the hammer and your entry will be at the high of the hammer. Will be same as for the red candle, because the color doesn't matter, only the tail of the hammer matters. As you can see in the chart, there is a formation of bullish hammer at this point. So let's check all the conditions necessary to confirm the trade of bullish hammer. First condition, there should be a downtrend. Second condition, the formation of hammer and the low of the hammer should be lowest among the neighbors. And the third condition, the high of the hammer should be broken. So your stop loss will be at the low of the hammer and your entry will be at the high of the hammer. So whenever the high of the hammer is broken, you can expect a strong bullish rally, as we can see on this chart. So let's talk about the trading psychology of hammer. The psychology is that even after the bearish rally, it means the sellers are highly dominant and trying to push the price down, and when they are getting the rejection in the hammer candle, it shows the climax of selling and the entry of the buyers. And if the buyers gain momentum and dominates the sellers, which means when the high is broken with a high volume, then the buyers become fully dominant and they control the market, and then you can expect a strong bullish rally after the high is broken. The hammer should be at the bottom of the chart and there must be a bearish rally, so as to confirm the exhaustion of sellers, which shows the climax of the sellers. For the bullish momentum, the hammer should be at the bottom of the chart. Now let's see the hanging man pattern. which is same as hammer, but the main difference is that the hammer occurs at the bottom of the chart but hanging man occurs at the top of the chart. And hammer is a bullish signal but the hanging man is a bearish signal. So let's check all the necessary condition for the hanging man. First, there should be a bullish rally, then the formation of hanging man, and we should mark the high and low of the hanging man. And the third admin condition, when the low is broken, you can take entry at the low of the hanging man and your stop loss will be at the high of the hanging man. After the low is broken of hanging man, you can expect a strong bearish rally because hanging man is a bearish signal. And there is one more important condition for the hanging man, that at the formation of hanging man there should be a gap up as compared to the previous close, and after the hanging man there should be a gap down. So it will become similar to the evening star and it give a more probability for the bearish rally because the hanging man will be similar to evening star. Now we will see the shooting star formation. It's look like a shooting star because it creates a big high, big head, and it shows that it is moving from up to down with a high momentum. And the formation, you can see the head of the candle. The head of the shooting star is almost double and more than double than the body, and the color doesn't matter, only the size of head is matter. Shooting star candle shows the rejection of the buyers. As you can see, when in this candle, when the price is open, buyers trying to push the price up and make a new high, but sellers take an entry and they push the price down back to the open price and moves further down to the low of that candle. So it particularly shows that the trading psychology of the shooting star is that sellers are highly dominant and they are trying to dominate, and sellers are highly aggressive and they are trying to dominate the buyers and they push the price further down. It shows the entry of the sellers, and if the momentum of the sellers is continued on the next day, then we can expect a strong bearish rally. Before taking the trade, we should also confirm all the necessary condition for the shooting star. So your stop loss will be at the high of the shooting star candle and your entry will be at the low of the shooting star. Whenever the low is broken, you can take the entry and expect a bearish rally. You can see in this chart there is a shooting star formation. So now let's check all the conditions necessary for shooting star. First, there should be a bullish rally. Second, the formation of shooting star, and the high of the shooting star should be highest among all the neighbors. Your stop loss will be at the high and your entry will be at the low. And as you can see, whenever the low is broken of the shooting star, we can expect a strong bearish rally. Now let's see the trading psychology of shooting star. Whenever there is a bullish rally in this chart, it means the buyers are highly aggressive and dominating the sellers, and then there should be a point when the buyers get rejection and the shooting star formation occurred on the chart, which shows the rejection of buyers from this point to this point. And whenever the low of the shooting star broke, it confirms the momentum of sellers is continued and sellers have taken the control of the market and they push the price down and creating a strong bearish rally. Shooting star formation should be at the top of the chart and it is a bearish candlestick pattern. As you can see on the screen, there is a formation of inverted hammer candle, which is actually a shooting star at the bottom of the chart. The shooting star occurs at the top of the chart and inverted hammer candle occurs at the bottom of the chart. This is the main difference, and the second difference is inverted hammer candle is actually a bullish signal and shooting star is a bearish signal. Now let's check all the necessary condition for this. There should be a first condition, there should be a small downtrend. Second condition, formation of inverted hammer candle. Third condition, mark the high and low of inverted hammer, and your entry will be at the high of the inverted hammer and stop loss will be at the low of inverted hammer. Whenever the high is broken, you can take entry and you can expect the strong bullish rally after the high is broken. The trading psychology of inverted hammer candle is, after the downtrend, the market is trying to push the price down, the sellers are trying to push the price down, and in the inverted hammer they again push the price down, but this is also a sign of weakness and a climax of sellers, because market is already fall so much, so it is a possibility of that buyers can take entry and dominate the sellers. After the formation of hammer candle, if the buyers break the high of the inverted hammer candle on the next day or the day after next day, then there is a high probability of getting a strong momentum of buyers and we can get a strong bullish rally after the high is broken. Now we will talk about spinning top. In this candle, as we can see, the head and the tail part is almost equal and is bigger than the body. The ratio of head and tail is almost 1:1 and the ratio of head to body is around 1:2 or more than 1:2. The length of head and the length of tail should be almost or greater than double the body, and the color of the spinning top doesn't matter, only the longer head and tail matter, and the ratio of head and tail should be around 1:1. So now let's talk about the trading psychology of a spinning top. As we can see, this is the open price, and after open the bars try to push the price up above, and then sellers came and sellers tried to push the price down and they push the price further down, and again buyer take entry, they push the price back to the open price. So this is a big cycle of buyers and sellers in which we can conclude that buyers and sellers both are trying to push the price but they are not able to dominate each other. Means there is a high volume and high momentum but still the price is not moving, so it is creating a very high volatility. This is a tough fight between buyers and sellers. Whenever the spinning top occurs in the chart, we have to check all the other condition and a strong price action to take trade, because spinning top can also cause sideways trend and it can form a series of doji and spinning top. As you can see, there is a spinning top at the bottom of this chart. Now we will see all the condition necessary for the spinning top. First condition, we are getting that we have a strong bearish rally, the formation of spinning top, and the low of the spinning top is lowest among its neighbors. So we will mark the high and the low of the spinning top. The low will be our stop loss and high will be our entry point. So whenever the high of the spinning top breaks, we can take entry and we can expect the strong bullish pattern, a strong bullish trend after this Now we talk about the trading psychology of spinning top. As you can see, the spinning top is made on the bottom of the chart. It means it is a bullish. It means it is a bullish signal. So when the downtrends came, the sellers are dominating the market. They haven't given the buyers to move the price up, but at the spinning top, the buyers have taken the entry and trying to push the market up. And the spinning top also shows the seller's climax if it is made on the bottom, and if on the next candle the high of the spinning top breaks, then it confirms that buyers have taken the control of the market and they can give a strong bullish rally, as you can see on this chart. So finally we can conclude that this spinning top is a bullish spinning top. Now we will see the spinning top in this chart, and here it is. But you can see in this chart the spinning top has occurred at the top of the chart, so it means it will show the bearish signal. Now let's check all the conditions necessary for bearish spinning top. The first condition, there should be a bullish rally. The second condition, formation of a spinning top, and the high of the spinning top should be higher as compared to the neighbors. So now we will mark low and high of that spinning top. The high will be our stop loss, and at the low we will take entry. So whenever the low of spinning top breaks, we can take entry and we can expect a strong bearish rally. Now we will talk about the trading psychology of spinning top. As you can see, in the uptrend, the buyers are trying to push the market up and clearly dominating the sellers, but at this point the sellers take entry and trying to push the price down, but buyers are also trying to push the price up. So there is a very strong battle of buyers and sellers in this spinning top, but we can confirm who will win after checking the breaking of high or low. So in this case, the low of spinning top breaks. It means sellers have taken the full control of the market and they are ready to give a strong bearish rally, as we can see in this chart. But if the high of the spinning top breaks, it means it will show the trend continuation instead of trend reversal. So there is a both possibility of trend reversal and trend continuation. So we should check according the high and low of any particular candle. So we can also see that the color of spinning top doesn't matter, the position of the spinning top matters, because in both cases of bullish and bearish, the candle is same but the position is different. Now we will talk about the Marubozu candle. As you can see on the screen, this is a very powerful candle, and Marubozu is a Japanese word for dominance. So Marubozu candle dominates all the other pattern, and they are extremely powerful candles. Why they are extremely powerful? Because they don't have any shadow or wicks. In the bullish Marubozu, the open is equal to low and the close is equal to high, and the bearish candle, open is equal to high and close is equal to low. So there is no wicks, head or tail. Now we will talk about the psychology of Marubozu candle. If we see in the bullish Marubozu, it means that this is the open price and which is also a low price. The open is equal to low and the buyers have taken entry and trying to push the market up, and sellers haven't got any chance, so open is equal to low and they keep pushing the price up and up till the high, and still sellers haven't got any chance to push the price down. So the close of the Marubozu candle is equal to high, and it shows the complete dominance of the buyers. And in the same case in the bearish Marubozu, this is the opening price. Price is falling. Sellers are dominating the buyers. Buyers are not able to do entry. So open is equal to high, and then price moving down and down till the closing price is equal to low. It means during the whole process of this candle, buyers haven't got any single chance to enter, and sellers are completely dominating the buyers. And even the closing of the bearish candle is equal to low. This Marubozu candle become more powerful if it has a higher volume as compared to the neighbor candles, and your entry will be at the high of the Marubozu candle, and stop loss will be at the low of the Marubozu for bullish, and it will be opposite in the bearish. This will be your SL, and this will be your entry. This Marubozu candle can show both trend continuation or trend reversal, and it is so powerful that it can also give trend reversal just by a single candle. Well, as you can see in the chart, this is a bullish Marubozu candle. Open is equal to low and close is almost equal to high. So now we will check on the other necessary condition for the bullish Marubozu candle. First condition, there should be a small bearish rally. Second condition, formation of bullish Marubozu candle. Open is equal to low and close is equal to high or almost equal to high. So we will mark the high and low of bullish Marubozu candle. The low will be our stop loss and high will be our entry point. Whenever the high is broken, we can take the entry and we can expect a strong bullish rally after the Marubozu candle. In this Marubozu candle, the trading psychology is that buyers are absent in the downtrend and sellers are completely dominating the market. But at this point, some institution or bank will take the very big order and make a very strong bullish Marubozu candle. It means they are completely dominating the sellers and with a very high volume and with a very aggressive buyers. So now sellers doesn't get any entry in this Marubozu candle, and it has a very high probability of giving the bullish rally after the high of the Marubozu candle broken. As you can see on the screen, this is a bearish Marubozu, and now let's check all the necessary condition for the Marubozu candle. We have a downtrend, and then one big candle and another big red candle, which is a bearish Marubozu. So first condition met, and the second condition, open is equal to high and the low is almost equal to close. So we will mark high and low of this candle. The high will be our stop loss and low will be our entry point. Whenever the low is broken, we can take the entry, and you can see we are getting a strong bearish rally again, which means this chart shows the trend continuation. In the previous case, we are trading the trend reversal, but this is a trend continuation. So we can expect both type of trade according to the breaking of high and low. If the low breaks in the downtrend, it means the trend is continued, and if the high break in the downtrend, we can expect the trend reversal. The psychology of this trade is that the sellers are highly active and they are pushing the price down, suddenly one big candle, green candle, it means buyers have taken entry in trying to push the price up, but again sellers dominate the buyers, and then again buyers are not able to compete the sellers, because in the Marubozu candle we can see open is equal to high and closing is almost equal to low, and when the low of the Marubozu candle breaks, it means the fresh entry of the sellers, and then again the sellers take control of the market and gives the strong bearish rally. I hope you watched the whole video without skipping and understand the concepts of single candlestick pattern. This is a candlestick accuracy table which I have made after a hard work and a long time research on different companies and on different time frame. So after all the research, I have made this accuracy table, and you can see from this table and compare all the candlestick pattern. First of all, take a screenshot of this table and save it. As you can see, this accuracy table has 4 columns. First column contains the name of the candlestick pattern. Second column contains the frequency. Third column contains the accuracy, and fourth column has the move. So the frequency tells us that how many times the particular candlestick pattern occurs in a particular time of period, like in a month, and the accuracy shows how many times that particular candlestick pattern give profit instead of failing, like best of 10. And in the move column, it shows whenever the particular candlestick pattern occurs, it gives a small move or a big move. Because the main problem in trading is that we know multiple strategy and multiple candlestick pattern, but we are not able to find the best which suits our trading style. So we must have a candlestick accuracy table so we can compare each other and we can know which candlestick pattern will give more trade and high accuracy and big move before even taking the trade. And we can also decide the target stop loss by this candlestick accuracy table. Suppose we take trade in doji star or doji long legged, then the frequency will be medium and the accuracy will be low, and the move will also be small, because doji mainly appears in the sideways market, and even it occurs on the trending market, either bullish or bearish, it still need a strong price action to take the trade. Whereas if we use dragonfly doji or gravestone doji, we can see the frequency is very less, accuracy is medium, and move is also medium. As we can also know that dragonfly doji and gravestone doji is very similar to hammer and shooting star, so all the condition will be same to same, but still doji is less powerful than hammer. If the frequency is very less, then it will be very hard to find the dragonfly doji or gravestone doji on the chart, but if we find it, we can expect a medium accuracy and medium move. Now let's check hammer and shooting star, the most important candlestick pattern. Frequency is less, but the accuracy is high and the move is also big, which clearly shows this is a very important pattern, and if we get in the chart, we should take trade on hammer and shooting star, so we can also invest a big amount as compared to doji and doji long leg, and also we can trail the stop loss because we are expecting the big move. And hammer shooting star is so powerful that it can give the trend reversal. It can change the whole direction of the trend and give a strong reversal. because hammer and shooting star actually shows the reversal of the trend. But if we see inverted hammer and hanging man, the frequency is rare, which means it's very difficult to find them, and also the accuracy is low. It shows it really gives a profit because hanging man is same as hammer and inverted hammer is same as shooting star, but it appears at the opposite side. Even it is a counter trend candlestick pattern, but the candle is itself a counter because it appears on the opposite side of the chart. The hammer should be at the bottom of the chart, but in the hanging man, hammer occurs at the top of the chart, and inverted hammer shooting star should be at the top of the chart, but in inverted hammer it is found at the bottom of the chart. That's why the accuracy of inverted hammer and hanging man is low, so it's better to avoid them. Now let's check spinning top. Frequency is less, accuracy is medium, and move is medium. So we cannot expect any good trade in spinning top until unless we get a strong conviction by checking all the necessary conditions which I already mentioned in this video. Then the last, Marubozu. As you can see, the frequency is very rare, but the accuracy is very high and the move is medium. So we can expect a good swing trade in the Marubozu candle because its accuracy is very high. So overall we can conclude that if we get the hammer, shooting star and Marubozu, we can expect a good trade, and we should never miss the opportunity of hammer, shooting star and Marubozu because these three candlestick pattern have high accuracy and can give a big move as compared to the rest of them. You must practice on this candlestick accuracy table before taking the trade, and you can put your risk reward ratio according to it, your target, stop loss and the investing amount. After checking this accuracy table, you can maintain high accuracy in your trades